So this is probably the best trade of the week and the trade with the highest confluence or highest probability of actually hitting. As you can see, there was an order block with this OB, which was this down candle before the move up to sweep the liquidity from this 4-hour PD array. All right, welcome back to my YouTube channel. My name is Lewis. If this is the first time that you've ever tuned into my YouTube channel, first of all, welcome. Second of all, make sure you follow me on Instagram if you want to keep up with my live trades, because I trade every day and I post all my results on Instagram, whether I win or I lose. Full transparency. And this video is gonna be, I'm gonna hop straight into it. I want to get a bunch of days that I missed from the past 2 trading weeks combined all in this video, so I could have a bunch of clips from my Instagram, because the Instagram has been going crazy and I honestly want to get all these clips out. I'm going to save a little rant towards the end of the video just on trading psychology. So if you want to understand my framework around trading and the psychology of money in general and what you really have to battle with on a live account, make sure you tune in to the end, because trust me, when I tell you there's a lot, and that's just the ones that I've written down on my actual notebook. I have the rest of them actually here on my phone. Honestly, trading recaps or journaling your trading has been probably the most beneficial thing that I've gotten into. As you guys can see, I don't know if you can see it in the video, but I could just scroll for days on that and you'll see a bunch of mistakes, a bunch of things I did right, what I was missing. It's just a way to keep yourself accountable when it comes to trading, because if you don't keep yourself accountable in these markets, it's really gonna mess you up. But let's get right into the video. Let me just stop talking, hop on the charts. I know my chart looks a lot more different now. I'll end up explaining that later on, especially like this stuff down here and all this that you see from this trading week. Honestly, I was doing some back testing today on Sunday the 11th. Back testing is going to be your best friend when it comes to trading, honestly. If you want to become confident in your strategy, back test, back test, back test. As you can see, you have a lot of trades that we have to go over. I'm gonna have a screenshot for every trade pop up, but I will show you exactly what I was thinking on each and every one of these trades. This is the trade that I took on Monday. As you can see, is a 4-to-1 risk to reward ratio. Okay, so my actual take profit was above this high up here, but this is where I ended up closing up the full trade. But let's get right into what I was thinking. All right, so as you can see, coming into the New York kill zone, I saw that we had created this high up here in the Asian session, and then we were just on a downtrend, and it actually ended up being a Judah swing because we ended up going up for the rest of the day. But so we ended up sweeping the sell side liquidity in the New York kill zone, but I ended up waiting for a fair value gap to form. So as you can see, this ended up using 3 of my confluences. It ended up being a sweep of liquidity from the lows on the Asian session, the fair value gap that ended up forming at 9.15, and equilibrium when price came into a discount for longs. As you can see, there is a tiny fair value gap right here. The bodies of the candles ended up respecting it, because you can see it definitely ended up wicking through the fair value gap, but it never closed under the fair value gap. As you can see, it never ended up closing under the fair value gap, so it ended up respecting. And as you can see, it ended up going straight to my take profits. I ended up taking partials right here above this high and left the runner up to this high. As you can see, it ended up hitting. And the next day on Tuesday, this was the next trade. It was a 4.1 RR. Coming into the New York kill zone, we were extremely bullish. As you can see, we were coming up, but I was just waiting for a fair value gap to form. I saw that one form down here, but price never came down to it, so I just waited. Another one formed right here, and then ended up turning into a consolidation. And we all know after a consolidation comes an expansion, especially when it lines up with the actual kill zone. So I waited for this consolidation to touch the fair value gap, and as soon as it touched the fair value gap, I entered. Right after that, price ended up expanding towards the high from the previous day Asian session. So there's only used 2 of my confluences, which was the fair value gap and the equilibrium. As you can see, the fair value gap ended up forming. It respected the fair value gap because none of the bodies ended up closing under the fair value gap. It was just wicking through, and then we entered a discount for longs when price dropped below the 50% of the fib. And I honestly believe the only reason why I took a long this day after price ended up dumping below on Tuesday was because I kept looking for the Judah swing of the week. I bet on that and ended up winning the trade, as you can see there. Okay, so moving on to Wednesday. This is the trade that I took on Wednesday. It was a smaller trade. It was a 1.44 RR, and a lot of people stay away from the 1-to-1s. I ended up taking it and it ended up playing out. Wasn't mad on Wednesday because the big move ended up happening in London either way, or coming right out of London. I was looking for a long, like I said. For some reason, I kept thinking if price was going to keep going down lower, that it was going to be a Judah swing. And as you can see right here, we ended up sweeping the liquidity below these lows from the London session of the day prior, which means that any net profitable longs that were placed from the day before, if they were still holding, they ended up being liquidated on Wednesday, the next next day. So I saw that sweep of liquidity. It was a 101 RR, and the reason for that as well was because this was taken off the 30-minute because I ended up missing this entry down here. I'll mark it out for you guys right here. As you can see, there's a fair value gap that I could have easily entered from, and it's honestly a unicorn model as well with a breaker there, as you guys can see, with this high being the breaker. So you can see the breaker and the fair value gap in there is the unicorn model with this high, lower low, higher high, and then a higher low with the fair value gap. I could have took that if I would have took the entry off of there, had my stop loss down here. It would have been a 4.84 RR, would have just targeted these equal highs from the London session, but I didn't take that one. Like I said, I took the other trade and it played out perfectly. I can't be mad at it. For the 25th, I will talk about in the rant at the end of the video. I have the screenshot come up still. It was a mess, honestly, but I can see from the screenshot that I was trying to play off of this fair value gap right here, this tiny fair value gap that ended up forming here. I got in here and then news came out and went crazy. I sold a bit up here and then the rest ended up coming down, so I sold out of it, but I could have just held it and then look, ended up coming back up. But either way, we saw the sweep of liquidity of the lows in the Asian session during London and the New York kill zone, which ended up taking out the people who took this long here. Yeah, Thursday was a mess. Friday was the trade that I took in the live video from the past video right before this one, so I'm gonna skip past that onto the next week. So this is the trade that I took on that next Monday for the next week on the 29th. It ended up being an L. For some reason, I thought we were still gonna be bullish because we were going in an uptrend, and we ended up fairly taking out the liquidity above these equal highs up here by maybe just 1 point, if I'm not mistaken. The only other spot for liquidity was gonna end up being from the lows of the London session. As you can see with this candle right here, exactly at 8:15, it was gonna go and try to sweep the liquidity above these if there was any trailing stop losses up there. As you can see, ended up wicking all the way up there, getting close to it, and then closing extremely far on the bearish side. So I should have seen that coming, and then as you can see, another failure swing here, and then ended up just going down and taking me out. I try to play off this fair value gap right here, as you can see. Try to play off of this fair value gap here. I ended up disrespecting the fair value gap just a bit, if I'm not mistaken, and then just taking me out. But that is the trade that I ended up taking. It was supposed to be a 5.51 risk to reward ratio if it would have came all the way up to the highs from the Asian session, but ended up not even doing that and just reversing, going all the way down. So then Tuesday came this trade right here, which was a 3.04 risk to reward ratio. And as you can see, since we were bearish on that one Monday, I was thinking, okay, I'm gonna look for shorts this week. So as soon as I saw the liquidity being taken out of the Asian session, which is right here on the London kill zone, I thought anybody who took that long in the London session would have had their stop losses right here at this low. So that's exactly where I targeted. Very risky play here because a fair value gap did not end up forming, but it probably did in the lower time frames, honestly. Not really. So as you can see, I just took it off the sweep of liquidity. That was a very risky play for me, and then it was a 3.04 risk to reward ratio, and that ended up playing out. This is a riskier type of trade, but like I said, sometimes you have to take riskier trades, and this comes with experience in the market. I took it, and I took it because I knew there was going to be news at 10. So I said if it ends up getting me out of the trade and I'm out of the market before the news at 10, I'll be very happy. And that's exactly what ended up happening. And as soon as the news came out, as you can see, this big candle ended up coming out. So I'm happy I didn't have any runners and I just got out of the market right there. But that is the trade that I took on Tuesday the 30th. Wednesday I did not trade because Wednesday was, I believe, FOMC. Something was going on Wednesday. It was some type of news. I believe it was FOMC, because just look at the price action on Wednesday. It was going to be just stop hunting the whole time, and I guess you could have had something play out up here and you could have rolled all this down, but I wasn't trying to even trade on that day, so I didn't take a trade on Wednesday. Let's move on to Thursday, which I took right here. All right, so this is the trade that I ended up taking on Thursday, the 1st of February. I could have honestly held it a lot longer, but I ended up getting out exactly at the lows of the Asian session. As you can see, we had a sweep of liquidity right here from the London session at the New York kill zone. I ended up getting in exactly there. I didn't wait for a fair value gap to form or anything like that. I said the only other place where there could be liquidity would be above this high from Wednesday, the day prior, and I was bearish on this day, so I said let me just take a short exactly at the sweep of liquidity, and it was very risky once again, but it ended up playing off. I could have held to the lows of Wednesday and it would have been an even bigger trade. Could have been a 6.06 RR, but I didn't take that trade. I was content with taking my 3.35 RR with the liquidity below the Asia lows, and I could have left the runner, but like I said, sometimes the best and most profitable traders miss out on a lot of price action, and I'm okay with that. So I understand that I'm not gonna catch every move and most of the price in every move, so it's okay. I took this trade, I was confident in it, and it ended up paying out. Friday, I don't know why I took this trade. trade. I recorded this trade live. I think I still have the recording for this trade, so I'm just gonna leave it for that video if I end up putting it out. But there was news, as you can see, at 8:30, ended up being extremely positive for the dollar. Came all the way up. I was like, I'm not gonna chase price. I'm just gonna wait for a retracement and see. But for some reason, since I was bearish on the few days before, I decided to take a short, and I thought it was gonna end up coming down, and I was gonna take closing out the whole trade right here at the 50% of the fair value gap. But it was just a bad trade. I should have just not traded this Friday, but it ended up taking me out right away. And yeah, I think I have the recording for that. These are the trades that I took this past week. As you can see right here, this is the trade from Monday. Let me just set up the kill zones. So this trade I ended up taking basically at the end of the New York kill zone. I seen the sweep of liquidity from the low at the London session, another sweep of liquidity from the high of the London session right here. So I said, okay, liquidity has been swept for sure. I decided to take it long because I was paying attention to this fair value gap here. That's what I was waiting for. Once I saw price go up and start coming back down, I said, let me see if it respects the fair value gap. It ended up respecting the fair value gap, and I entered here. It was a 3.29 risk to reward ratio. Ended up putting me right on top of the fair value gap when I entered. I ended up taking partials on top of this high, and my take profit was above this high, which, as you can see, was also hit. So this trade was also a success. I believe it used 3 of my confluences: sweep of liquidity, fair value gap, and we entered a discount for longs when price went under the 50% mark of the fib. So that's 3 of my confluences right there: sweep of liquidity, fair value gap, and the 50% on the fib. Ended up going up. It was a 3.29 RR, and it ended up being a low resistance liquidity run. The screenshot for this already came up. Don't pay too much attention to what I have on the actual chart because I was back testing some stuff, but get right into it. But this is the trade that I ended up taking on this day, which was a 2.81 RR. In the actual screenshot video, posted it live on Instagram, and I explained everything that I saw happening. So this is probably the best trade of the week and the trade with the highest confluence or highest probability of actually hitting. As you can see, there was an order block with this OB, which was this down candle before the move up to sweep the liquidity from this 4-hour PDO rate. That's the first confluence, which was the sweep of liquidity. Then we ended up creating a failure sweep right here, a fair value gap. Price ended up coming down and then retracing right into the fair value gap, which is where I took my short. And then I targeted the lows from the day prior, which is right here. And as you can see, price just melted like butter and went straight there. I could have held a runner and probably gone for maybe these lows from Friday or the top of this fair value gap from Friday, but I didn't hold. Like I said, you're gonna miss out on a lot of price action if you're gonna be a profitable trader. Just be aware of the fact that the market doesn't owe you anything, so take what you can and get out of there. Forget about price action that you ended up missing, because if it's a win, it's a win. Don't be mad at it. So this is the trade that I ended up taking on Wednesday. As you can see, this is the kill zone, and it was towards the end of the kill zone in New York. We had the sweep of liquidity right here with this candle. I was waiting for this placement to the downside, and this was it right here. It ended up creating this fair value gap. As you can see there, that fair value gap ended up forming. I ended up taking my trade off of that fair value gap because we technically had swept liquidity right here. So we had a sweep of liquidity with this candle at 850. We had a fair value gap form at 9. So then we had price come into a discount for shorts on the fib, with price coming up above the 50% of the fib. And like I said, there was a 15-minute fair value gap on top of this, so that's why it ended up disrespecting this fair value gap a bit and coming back up and touching it. So I wasn't mad about that. I always have protective stop losses and have my stop loss above the high. Yeah, you could be risking a little bit more with that, but if I would have had, for example, my stop loss above the fair value gap just a bit, I would have been stopped out in this trade, and I would have had to watch price come all the way down to where I had it coming down to, which was the low of this Asian session over here. As you can see, it was a pretty good trade, a 3.35 risk to reward ratio, and I ended up winning this trade. I ended up using 3 of my confluences. Like I said, we had the sweep of liquidity, we had the fib 50%, and we had a fair value gap form. Like I said, the only reason why it disrespected the fair value gap a bit was because it ended up touching a higher time frame PD array just before displacing to the downside. And then Thursday, I held a swing trade, and it ended up taking me out over here on Friday. I have the screenshot up, but I had multiple chances of coming out with actual profit in this trade. I was targeting these highs up here, which are equal highs on a higher time frame, so I can't be mad. I ended up holding it, hoping that it went up there overnight and took me out, but that is just something that I had to sleep with. I don't really care too much about it. Honestly, I'm ready for this trading week. Now that we're done with all the trades, that's a bunch of clips for this week's YouTube, or for this week's Instagram. So like I said, follow me on Instagram for sure, because I do not miss on the days that I trade. If you see me not post one day, it's not because I lost or I didn't want to to put it up. It's probably because it was a swing trade. I held this swing trade, so I posted from Monday to Wednesday all my winning trades, and then I posted the loss on Friday when it took me out, because it ended up taking me out on Friday at 8:30 with news. So yeah, make sure you tune out over there. And I usually express why I ended up taking the trade anyways through text, like you saw in a bunch of the screenshots that came up in this video. But yeah, let's just get into the trading psychology stuff that I had to talk about, because I don't want to make this too long of a video. But all I have to say is that if you're putting in the back testing, if you're putting in the time studying, and you've gotten to the point where this trading stuff is kind of an obsession to you, I need you to trust yourself. And I'm saying this because I need to trust myself a lot more. I need to trust my bias and trust my moves and not be hesitant, because I don't want to lose a trade. That doesn't really matter, because as long as you have good risk management and you live to trade another day, you will become a successful trader. Like I say, with me, it's just a matter of trusting myself, not letting people who have less experience or no experience or trade a different theory than I do get into my head, and then I start questioning myself. No, you need to trust yourself, trust your bias. If you lose a trade, so be it. You're gonna end up losing. The money doesn't really matter to me. Like I said, I have a very strong relationship and understand exactly how money works and what money is. Apart from that, what really gets me upset is when I lose my discipline and I go against what I said I was gonna do, or I don't trust myself. This is a profession which will have you fighting against a lot of ghosts or a lot of things that you thought you took care of. This will bring out a lot of things from within you that helps you realize, and that's why it's so important to have an actual journal, just to write down your thoughts through a trade, after a trade, what you did good, what you did bad, which is basically a journal. But you need to trust yourself if you are actually putting in the work, and I know I'm somebody who's putting in the work, so I have nothing to worry about. Right now, I am so happy that I recorded this video. Thank you so much for your support on both the YouTube channel and the Instagram. If you haven't subscribed, left a comment, shared with a friend, make sure you do that. Make sure you journal, stay strong. Think about this trading journey thing as not a get rich quick. Don't think of it as a get rich quick scheme. Make sure you think about it as a long-term thing, because the way I'm seeing it right now, in a year from now, 2 years from now, I'm gonna be basically unstoppable in this stuff, and I have the capital to change my life, propel my life. I don't need to go through prop firms, which I technically can, and I'm thinking about buying a prop firm challenge, but as of right now, I'm just focused on the account with the YouTube channel. You need to understand that if you are not actively studying this, you are not obsessing with it. Like I said, I'm having dreams about this. I have dreams of trades that I have going on. I like to say this as a joke, but it's honestly true. When I close my eyes, I see charts. I see the lines going up and down. At this point, it's ingrained inside of me. That's exactly how it has to be. If you're not prepared to be like this is not gonna be fun for you. And like I said, I like learning, and the lifestyle that this can provide for me is something that I want. So I'm not gonna cheat myself out of the experience and the journey. I'm not going to doubt myself. I'm not gonna be upset when I lose one trade, when obviously you can gain that back in another trade. If you have the correct risk management, your losses will be mitigated very quickly by your wins, because you can lose small and win very big in this trading thing. I honestly believe that by next week, probably the next video after this one, we will have our first withdrawal. And I know I've been saying it, but I could have easily had it this week. Just a bunch of mistakes that I ended up having in terms of just not trusting myself, getting in when I wasn't supposed to by accident, and not by accident as in like I clicked something, but my bias was kind of flipping back and forth. I wasn't reacting to what the chart was showing me. I was reacting to what I wanted the chart to do, and that's something that you can't do in trading. But yeah, that's enough of me rambling. Thank you so much for tuning into this video. If it was rather long, I have no idea how long I've been recording, but either way, we've gotten to the end. If you support this, make sure you follow me on Instagram, share with a friend, put it on your story, I'll tag you, do that. But yeah, I'm about to do my analysis for the week, and we'll catch you in the next video. Thank you. Peace out.